Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Tuesday, the 5th of March, 2019. We're just after 2:15 p.m. Central Standard Time. And as you can see, the action today was actually in the wheat market, which had a pretty good gain, even though we're hearing about world crops that are still quite large. In fact, Russia's could be very large before it's all over. The corn market up a penny, and we're down in the soybeans about 2 1/4. Not an awful lot going one way or the other. The dollar had a big rally, but it's given up a chunk of those gains. It's about mid-session now, about midpoint in the range of the day. And we have gone from reversing hard to the downside in a number of these different currencies to at least getting a bounce off the lows. And even the British pound has come back about 75 points off the low of the day. Stock market, it's like watching paint. Not much going on there. And talking paint dry. So when you look at the soybean chart, I can't say that I'm surprised that the market's gotten back to the 18-week moving average of closes. And this is an area chart of only closing prices. So I see the market as being somewhat neutral at the current price level. If we take a look at what's going on, you can actually see the rally that you had off of a break low. You went higher, closed lower, and then down again. In fact, what that's going to set up as we come to the swing line is a swing line that's pointing down at this point, but got a higher high and a lower low. There's just no trend, and you're stuck at these moving averages. Now, what the market did try to do today, and I think you can see that, is close under both these averages. And the big question for me is whether we're going to get a what we call a crossover, a bearish crossover, where the 18-day average gets under the 100-day. That would not be a friendly sign. So I want to see if that occurs as time goes on. As to the downside, I have no reason to suspect that another test of the Bollinger Band, should it occur, won't be met with the same fanfare that, yeah, you can get through it, but it offers some support there. On rallies, I would look for resistance between the 100-day and the 18, but I don't see a trend right here. What we have is a market that's got a neutral bias. You can see that in the momentum as measured by the slow stochastic. You've got the bias down, not the momentum, but the bias down here. Momentum flat, bias down because you're under the 18-day average with no trend on the swing lines. The soy meal is similar. You had the biggest break low, you just had the 302.80. You snap back a day later, go up $10 roughly, and then you give up some of that today as the market sinks back to the 18-day average, trying to figure out what to do. Is there a trend? Again, no. You've got momentum up. The bias is up, but you don't have a swing line. Swing line means that if you're in an uptrend, you typically have higher highs, higher lows. You can get wild moves, but it's rarely that the market continues with those moves in any meaningful way. Let me turn off my phone right there. In the soy oil market, we have lower highs, lower lows. The market challenging the lower Bollinger Band, as you can see. We are certainly in the oversold territory here, but this is a trend. It is a trend that's in oversold territory, but you have lower highs, lower lows, the bias down. In the corn market, you have a pattern of lower highs, lower lows, so a downtrend. Let's assume you want to break that. You have to take out 377 3/4, and then wherever that 18-day average comes in should be something of a resistance point. In the wheat market today, you had an outside day to the upside, not a key reversal. The reason it's just called an outside day is you took out the previous day's low and high, and yes, you closed higher, but you didn't make a new low on the move. So I'll just call that a reversal. What rules the market as far as I'm concerned is the slow stochastics. And as long as they're what we call embedded, where both the blue and the red, which are called the K and the D lines, stay under 20, that says that rallies should be sold by the pros. We'll see if that happens. I'm not saying they have to do it, but that's what I'd expect them to do. In the sugar market, a bounce, but that's about all that you can say. You had an 8-point bounce. Is the market going to challenge the lower Bollinger Band or make a run back up into the resistance? It's certainly in oversold territory, but it's got the lower highs, lower lows, downside bias, and hasn't recently hit the lower Bollinger Bands. Doesn't have to. It is something we should be watching. In the coffee market, a nice little bounce. Here's what happened here. This is called the embedded reading. Remember, we were just showing it in the wheat market. When you lose the embedded reading like you did here, it is not uncommon that price and the 18-day average make a run at each other. And you can see what happened right through here. You had a run, a pullback down, and now you're making your run again. I still look for the 18-day average and the current price to hit each other. And then we have to wait and see if the seasonals come in. Right now in coffee, what you're getting is weather in Vietnam that's concerning. In the cocoa market, you're still very much in a bear trend, 2 days in a row under the lower Bollinger Band. 5% of the time you'll stay above or below a Bollinger Band. So that means 95% of the time within it. I count each consecutive day under a band, or if you get consecutive days over, as each one of those days is 1 percentage point of the 5%. So I give the market a 3% chance tomorrow of staying under that band. Okay. So you get a market that I'm expecting to get a bounce. What I'm getting concerned about if I were looking at cocoa as a trader is you got a bearish crossover today. You got the 18-day under the 100. That's not a good sign for upward movement. In the cotton market, you went up to the upper Bollinger Band, and now that you're there, you're in resistance. So you're in an uptrend. You've got the higher lows, higher highs. The fact that the market today was able, and this is important as far as I can see it, if you look at today's low of 73.09 and yesterday's low of 73.09, you can see them right here, 73.09 yesterday, 73.09 today, and then you took out the high. You're now into the resistance. The big question for me will be, will the market take out 75.16 and continue the pattern of higher lows, higher highs, or start a pattern of a lower high by coming back down here? Right now, I think the bulls have the edge. In the cattle market, we seem to be stuck at the 18-day average of closes. When markets get up to Bollinger Bands or under them and they get a correction, if they break a pattern like they did here, you had higher highs, higher lows, and you come down, you reset often, not always, often though, against that 18-day average of closes. You can see how it's done it in a number of these cases right here, and then the market figures out the next move from there. In the feeder cattle market, you're down to the lower Bollinger Band and oversold. This is probably an area where short covering should be seen in the market. We'll see if I'm right or wrong or that. What is the trend? It is down but oversold. Resistance back up at the 18 and the 100-day average of closes. And in the hog market, still coming up. Vietnam, interestingly, says it's going to take drastic action on the swine flu fever that has broken out there. It's a big problem for them. China's had it. And the question is, will the market keep coming up? Pork is a big staple in a lot of Asian countries, so we have to see if they're going to do any imports and where they import it from. It would be certainly helpful if for the U.S. farmer if we didn't have the trade war with China. That should help things a little bit. I want to remind you that one of the things I love to do is my morning subscriber video. Now let me explain what I'm able to do in that, because it's different than what you're seeing. Number one, I'm not in it. My voice is there, but I review 40 charts, and they will look just like you're seeing behind me. And with those, you're going to get Bollinger Bands, moving averages. I'll explain window envelopes and slow stochastics. Plus, I'm able to really talk in that different than I do here. I am able, on those 40 markets that I cover, to say buy here, sell there. Here's what I see the pros are doing. What I think you could do for a day trade, a position trade. If I have an option idea, I might even throw it out. But you get a lot of information in here, different than I'm able to do. And yes, because it's so what I call focused, just for a trader, not talking the generality of the market, we charge a bit for it. 26.5 cents a day, basically, to get yourself started to see if you like it. After that, the price is $15, but you can buy a yearly subscription to it for $13 a month, and you pay it up front. Pretty simple. So how do you find out about it? Well, you can either go to our website or ideally call one of our staff. But if you go to the website, just go under education or research, go to morning subscriber video. It's all explained there. I'm Ira Epstein. You have a good day, and I will see you tomorrow.